Hi, Daisy. Thank you very much for joining us today. How are things in London?
They're good, thanks, James. It's sunny for once, which is nice. And I wanted to thank you for having me on today as well.
It's our pleasure. Daisy, in spite of what's happening in the global markets, battery metals are holding up very well with the benchmark lithium index still up over 130% on the year. But before we examine lithium and the various other battery metals in more detail, why don't we just start with a brief intro of Benchmark Minerals Intelligence? Where is the firm based and what services does the firm offer?
Sure. So Benchmark is predominantly based in our office in London, but we do actually have people all over the globe. You know, we've got people based in Australia, China, Japan, and the US. So we're a global company, really, which represents what we want to be doing as well. So we were founded in 2014, primarily as a source of actionable intelligence for the lithium-ion battery supply chain. We've evolved over the years now. There's quite a number of us, and we offer a range of kind of products and services that provide data and insight into the lithium-ion battery supply chain. So we do price assessments, we have a consultancy and forecasting division, and we run a number of events as well that provide data and this insight into what is such kind of a growing market and something that is really kind of catching people's attention these days as well.
Lithium is up over 130% on the year, and it's up over 400. It was up over 400% in 2021, and this is being driven by a big push toward a green economy, and a big part of that has to do with electric vehicles or EVs. And I want to get a sense of how important EVs are to the demand for battery metals and also to the price movements. Maybe you can just give us some background on this. How many EVs were produced in 2021 and where do you think that demand is going in the coming years?
Sure. So EVs are a massive, massive part of this growth story and where demand for these raw materials are coming from. You know, all of these raw materials have their traditional end applications that they've always had. But now what we're seeing is this introduction of demand from electric vehicles, and that is the demand that is now making up the most significant share of why we need these raw materials. In terms of the numbers, in 2021 alone, 6 million EVs were sold globally, and 3.5 million of them were in China, which has really kind of taken the reins in terms of adoption of the electric vehicle and kind of acceptance of the market. Going forward, this isn't something that we're expecting to see stop. The growth is going to continue to accelerate. Demand from batteries is expected to grow at more than 20% compound annual growth rate through to 2032. So over the next decade, we're only going to see this demand and this growth go even further and really significantly remain the most key source of demand for the raw materials that we cover at Benchmark and the ones that everyone's talking about at the moment.
And when I look at EVs and the demand, what percent would EVs be of the overall lithium-ion battery market? How important is it?
Sure. So, you know, there's stationary storage as well, and there's portable electronics. And portable electronics, for one, aren't going anywhere, you know, mobile phones, laptops. And stationary storage is something that is slowly growing and may become more of a percentage of the kind of battery market. But EVs are, you know, 75, 80% of where lithium-ion batteries are going at the moment. So really, really underpinning a major proportion of the industry.
The primary metals used to produce a lithium-ion battery for an EV or any other mobile device are lithium, cobalt, nickel, and graphite. And lithium is a very important one. So why don't we just start there? Where is lithium mined and who are the major players in the lithium extraction market?
Sure, yeah. So lithium historically has kind of come from two sources. There's brine resources and there's hard rock resources, primarily spodumene ore. On the brine front, we have a number of companies operating in South America who have kind of become the incumbents in the space. We refer to the big five in lithium. For those companies outside of China, that's SQM, Albemarle, and Livent, who have kind of been the mainstays in the industry over the last few decades. Outside of South America and into China, which kind of dominates the processing of lithium into the lithium chemicals that go into batteries, we're looking at Tianqi and Ganfeng as the other two kind of key players in this big five. In terms of the spodumene resources in Australia, there's a couple of other players that have kind of come into fruition over the last couple of years. Pilbara Mineral Resources are all significant producers on the hard rock front, and there's many more players that are emerging in the space. So it's becoming a much more diverse industry. It's not just those big five anymore, but there certainly have been some mainstays in the industry who have been kind of key drivers in lithium supply over the last few years.
And the lithium price is holding up in spite of global markets around the world being rocked. And do you expect this to continue, or do you foresee some sort of pricing pressure on lithium in the coming months?
Sure. So the lithium market has, as you say, seen significant price increases. And the reason behind this is what's been developing as a true lack of supply of lithium. You know, the demand that we've spoken about earlier from the EV industry particularly has been unprecedented, and as such, the need for lithium supply has been huge, and the growth of that lithium supply hasn't been at the rate that it needs to be at. So we've seen actually in the later half of April and into early May a slight softening of lithium prices in China after what has been such a significant growth in 2021 and 2022. While of course this is a different story to what we've seen over the last few months, the expectation is that really this isn't an overall market correction. Prices are still being driven by this massive deficit of supply, and it's more linked to the strict COVID regulations that we see in China. Some of the EV factories have been unable to operate. Battery production statistics are down on the back of that as well. And we've seen maybe a small pullback in lithium prices locally within the Chinese market over kind of late April and early May. But really, you know, we don't expect there to be a major price correction in the lithium industry over kind of 2022 and going into 2023. The supply that we need really isn't there, and the availability of material is exceptionally limited. You know, most lithium globally is under contract, and any additional material that might be needed either under those contracts or on the spot market is not available, and that's continuing to push up prices. Many of the contracted volumes now are indexed to price reporting agencies and publicly available prices, so they're ticking up along with what's happened in the Chinese market on a slight lag as well. So even though things have quieted down in the Chinese market perhaps for a few months, we're not seeing that globally. Those prices are still going up. So there's not really any sort of significant pullback that we're expecting to see.
That's a great overview of lithium. Why don't we move on now and discuss the other metals associated with lithium-ion batteries, including cobalt, nickel, and graphite. Graphite is increasingly becoming an important part of the battery growth story. So why don't we just start there? Tell us where is it mined and what's happened to the pricing of graphite in this environment.
Sure, yeah. So by volume, graphite is the material that is most significant in a lithium-ion battery. I think perhaps it's not had the limelight that lithium has had over the last couple of years, and that may be something that is coming for the graphite industry. The graphite industry is largely focused in a couple of places. There's a fair amount of graphite production within China in some of the northeast provinces. I'm talking flake graphite production here, so natural graphite, and then also synthetic, which is the other side of graphite, is entirely produced in China. And then back to the flake graphite outside of China, we see some supply from Madagascar and also some supply from Mozambique. So There's graphite coming from kind of a multitude of places, but a bit like lithium and the other battery materials, it's not going to be enough supply based on the demand that we're anticipating from the EV space and the battery space in general. In terms of pricing for graphite, it's not seen the record highs and the mass price rally that lithium saw. Largely, that was because during the pandemic, the cost of logistics really kind of overshadowed the value of graphite itself. It's a cheaper material than some of the other key battery materials, and the amount that shipping makes up in its cost is actually quite significant. You know, it's a drop in the ocean when you look at a lithium shipment or you look at a cobalt shipment. It actually makes up quite a significant amount of the value in a graphite shipment. And of course, the logistics related to all the lockdowns meant that graphite couldn't really see the increases that perhaps it might have seen over the last couple of years. But in the last few months, we have really started to see graphite prices tick up. Both synthetic graphite, which is linked to oil derivatives. So of course, with oil prices going up, synthetic graphite has gone up, and with flake graphite as well. Anode demand, particularly in China, has been going through the roof in the last couple of months. The scale at which we see anode announcements now is huge. Every new announcement is for anode facilities that are 100, 200, 300,000 tons, as opposed to a few years ago when we were seeing announcements of 20 or 30,000 tons. So we're seeing a 10x increase on the capacity of anode facilities. And of course, that means demand for graphite. So I think that's something that's really coming into play and will continue to kind of drive graphite prices going forward.
Another metal that's been in the news lately is nickel. It's had an explosion in price. Why don't you just touch on nickel and where you and your team think the nickel pricing is going, and maybe just start with the major producers of nickel?
Sure. So a lot of the grade 1 nickel, which is what goes into batteries, actually comes from Russia. And of course, since the Russian invasion of Ukraine, that's really caused some major problems for nickel supply and is really the driver behind what happened with the LME and the significant increase in nickel prices lately. Prior to that happening, there was kind of an expectation in the nickel market that swing supply from Indonesia would be a extra source of relief in the nickel market over the next couple of years. There's been some developments in the way that nickel for batteries can be produced. But of course, that has all changed given the situation with Russia. So that market now is really undergoing some changes. There's been some fallout on the back of what happened with the LME, and there's been some move towards readjusting pricing mechanisms. There's the Sheffield exchange that has kind of seen more of a focus from the nickel market since the situation with the LME. And things are changing now in the nickel market. You know, we've seen perhaps a slight recorrection in prices since everything exploded, but prices are still really, really high. And of course, that's driven by the same driver that's pushing up the lithium prices, pushing up the graphite prices, and that is this EV demand. You know, the geopolitical situation is, of course, an extra factor in the nickel market, but the base fundamentals are still there in terms of supply and demand. So nickel prices are expected to remain high going forward as well.
And why don't we just finish up with cobalt? Where do you and your team see the cobalt pricing going in the coming years?
Sure. So again, like the other battery minerals, it sounds like I'm on repeat, but cobalt prices have also been ticking up under strong battery demand. That's the key driver behind cobalt prices lately. What we've actually seen in the last couple of months, so over April and going into May, the impact of COVID in China has begun to slow down cobalt pricing in recent weeks. Of course, the kind of slight stymieing of near-term demand with these shutdowns in the EV factories has had a similar impact on cobalt as it has on some of the other materials. And some of the Chinese producers are beginning to up their supply of cobalt into Europe as well. So cobalt prices, perhaps in the near term, we're not seeing too much of an upside, but they certainly have seen an increase over the last year or so. And cobalt's a bit of a different one as well. We're seeing a trend towards substituting cobalt out of batteries with high nickel cathode chemistries. So it's a price that can kind of be accepted by cathode producers and buyers of cobalt at the moment. But nonetheless, it has definitely still seen the impact of rising demand.
China is the dominant player in the battery metals processing. The largest battery producer in the world is CATL. They control over 30% of the market. China produces over 80% of the world's lithium-ion battery production. How did China become such a dominant force in the production of lithium-ion batteries, even though the raw inputs or many of the raw imports come from other countries?
Sure. So China's story is really about realizing what other nations didn't realize. They didn't necessarily have the technological advancements that other countries had. Japan, Korea were really leading the tech story. But China put the investment in. A few of the big players put significant investment into these supply chains, and that kind of paved the way for them to continue dominating the space. They've been able to scale up at a rate that we've not seen anywhere else. And kind of once they established the supply chain capacity and the facilities that they had, it was easy to replicate and massively increase capacity. It's something that, of course, they can compete with on a cost basis. The capital in China means that these facilities can pop up very, very quickly, and the investment that we've seen going into them comes about very, very quickly as well. There's no waiting about for new announcements. It's daily, multi times a day that you hear new announcements of Chinese facilities across the board. Every critical battery raw material, there's a new announcement, either within China, but also Chinese companies reaching out globally and putting those investments elsewhere as well to kind of dominate not only their own supply chain, but begin to gain market share globally as well. It's something that, of course, everyone is aware of, that China dominates this industry, and it's something that is, of course, difficult to compete with. The scale, of course, and the capital to some extent, but there have been some pushes behind kind of localizing other supply chains. We're starting to see policies being introduced that mean that localized goods receive better benefits in terms of the end product. Better taxation in Europe if you source the components of the EV locally. We've seen announcements from the Biden administration regarding integrating facilities along the battery supply chain, but China will continue to play quite a significant role going forward. There's no doubt about that. And their expertise is something that the rest of the world should rely on. In order to be successful in this supply chain, you need to go to the people who know what they're doing. And of course, that is China. So it's about, working to understand that everyone wants to localize their supply chains. China wants to localize their supply chains, but so do other nations now. And it's really kind of becoming the forefront of realizing that there's going to have to be some collaboration involved, and some acceptance of where the knowledge lies in order for this industry to be able to develop at the rate that it needs to develop at to meet demand.
So even though we're seeing announcements of gigafactories being built throughout the US and also in Europe, there's no chance in the near term of anybody surpassing or even coming close to surpassing China's dominance.
No, I mean, currently Chinese gigafactories and cell production make up maybe 80 or 90% of global cell production. And going forward, even towards the end of the decade, there's, probably more than a handful of gigafactories in North America and Europe now. We do see announcements cropping up. But of course, the existing capacity that we have in China is not something that can be caught up with anytime soon. Those facilities are well established. They're producing cells at very, very good capacity utilization, and they know what they're doing. It's a wealth of knowledge in China, and it's something that is definitely going to be a challenge to catch up with globally. I touched on Japan and Korea earlier and how they have the existing technology, and I would say they are developing a decent battery base in those regions as well, but certainly nothing that will match China anytime soon. It's so well established, and the rate at which new facilities can be built is so quick that it's a difficult game to play in terms of catching up with China.
Daisy, as we wrap up, Benchmark organizes some amazing conferences focused on EVs and the battery metal supply chain. What events do you and your team have planned in the coming months?
Sure. So next month, we've got one of our key events that focuses on these battery gigafactories that we were just talking about. I spoke about the handful, or what is now more than a handful, of gigafactories that are in North America. So we've got our Washington, D.C. battery gigafactories event in June on the 23rd and the 24th, which will really be a coming together of many, many key players in the battery supply chain, obviously with a focus on the downstream, but it will cover the whole supply chain from raw materials through to the midstream, through to the battery gigafactories. And there's also a strong political and government presence at that event as well. So really taking the policy into consideration and how governments can begin to get involved with ensuring that the grow out of the lithium-ion battery supply chain outside of China is something that can be done efficiently and with collaboration across the supply chain. And then going later into the year, we've got a similar battery gigafactories event in Jakarta in Indonesia, which will again focus on similar topics, obviously a slightly different picture in that region of the world. So we'll see a big focus on cathode production, and of course what I touched on before with how gigafactories are developing, of course, in China and then in the rest of Asia. And then fast forwarding to November, we've got the Benchmark Week event, which we used to hold every year before the pandemic. It will be the first time back in person after a couple of years, and that covers everything you could possibly want to be covered in the lithium-ion battery supply chain. You know, we have a day that focuses on cathodes, we have a day that focuses in on anodes, and everything else in between as well. So that's really kind of showcasing everything that we do at Benchmark and everything that we kind of talk about, and everything that we do will be consolidated in that event. And they're all on the website for everyone to check out as well. There's our events page. So really, really good events that are worth attending.
Well, that's great. Listen, that was a great overview of what's happening within the lithium-ion battery space, and I want to thank you very much for spending time with us today.
Thank you so much, James.